I agree, this debt is crazy, but who the F is getting an 8% return LOL? So an 8% return is actually very reasonable in the stock market. And if you aren't invested in the stock market and you aren't really used to some of those higher returns compared to like a bank account or like a high yield savings, this is a very crucial moment for you and you really need to look into this and start researching this. So the 8% return, how I use it is say from the S&P 500, tracks the top 500 companies in the US by market capitalization. And basically, when we use the 8% figure, this is over a pretty long time horizon, and it already factors in inflation. So we have really two numbers we look at. So the geometric mean, that considers these up and downs of each year through the stock market, that is actually about 10% for the S&P 500. So after inflation, you could use, say, 7 to 8%, because inflation long-term runs around 3%. Now, you sometimes will hear this 12% figure out there. The 12% figure is the arithmetic mean of the S&P 500. So technically you could use that, but again, that doesn't factor in inflation. And that average really isn't truly accurate into how we would calculate the true mean. So stick with the geometric mean, and to make it even more accurate, use the inflation adjusted mean. Comes out about 7 to 8%. So if you don't already, get involved in the stock market, because building wealth, you're not going to obviously get that from a bank account. You need to be exposed to some equities out there as well.